Forward. We appreciate it. I do want to welcome in our next guest to the show. Take a more broad look at the markets as we close out this week. Joining us now, Patrick Mueller, of course, the RFC and president of Bella Advisors. Patrick, great to have you with us as always. I'd love to just get your thoughts as we're closing out a pretty volatile week in the green for now. What are your thoughts on market action we've seen so far?
I think the market right now, Marley, is just showing some uncertainty, I think, with the government shutdown and the CPI report that it had been waiting on to come out, because we don't know how accurate it really is with the government shutdown. And I think you're seeing the reaction to that today, that pretty much what's happening now with inflation, it's cooling. The Fed's going to be dropping interest rates a couple of times this year. So I think the market's starting to look a little bit forward now, which is why we're starting to see that positive swing here moving forward. And I think we'll see that trend for a while until we start seeing some of the tariff impact that we'll have to see at some point here in the near future. So when we see that, I think we'll see the market starting to draw back a little bit. And long term, I'm very optimistic where the markets are going to go. But we'll see some short-term pain here in the near future.
All right, so if we see that short-term pain and we're expecting to see some of this bite from the tariffs coming up soon, but we did get that CPI report you mentioned coming in a little cooler than expected. We now have full expectations of a Fed rate cut in their meeting next week. How confident are you that the Fed can cut and potentially continue cutting in December without reigniting inflation?
It'll be interesting to see, but I think the Fed is always late to the game. They've been very consistent on what they've said that they were going to do. Since late last year, Powell has said that he was going to be slow rolling, bringing interest rates down, waiting until the end of this year. So I think you're going to see those rate cuts. How that's going to impact inflation, we'll see. I think that we're going to get more of an impact from tariffs and the recent energy costs that have been going up here recently. I think we're going to see more of an impact from that, because as gas prices go up, it affects everything. It affects transportation, and it's affecting all the goods that are being shipped across the country. So that is definitely going to be, I think, a bigger driver moving up.
So when we start to see some of that impact, what sectors and companies do you think we're going to see hit first?
Well, we're definitely going to see retail. We're going to see it there, and we can start seeing a spike from that, I think, in Christmas time here. So the seasonal spending, I think we're going to start seeing an uptick there. So I could start seeing that industry, whether it's Amazon prices going up, Walmart going up, and they're going to try to keep things as down as low as they possibly can to take advantage of the season, but they still need earnings. They still need to make money. And I think we're going to see an impact there. And a big mover, that's really nice is with earnings right now. We're seeing that, especially in the tech sector. It's so overweighted right now, where we got basically, 37% of the growth coming from the top 10 companies. And it's the biggest overweight in history, right, of the markets.
And you mentioned that, that we have this top 10 making up more than, roughly 37% of the S&P. And I saw in your notes that you had made a note that was higher than during the dot-com bubble. When you see a figure like that, Patrick, do you see that as a sign of market fragility, or is this just concentration in real profitable companies?
I think it's real profitable companies. We're seeing the best earnings coming from the tech sector. One of the big differences back when the dot-com bubble busted is you had companies that were going to the moon, right? Their prices were going to the moon, and they didn't have any earnings. They had negative earnings. And so I think now it's completely different, because we're seeing strong earnings, right? They've got the cash coming in. You had companies that weren't making any money at all back when the dot-com bubble bust, and now that's not the case. But I think everybody should be very cautious to make sure that they're not overweighted into the tech sector, because there's still going to be volatility there at the rate of speed that things are moving, and companies are competing against each other. You want to make sure that you're not overweighted in that. So if we do see a big drawdown, we're overdue for a market correction. And who knows what's going to be the catalyst of that that's going to cause that to start moving in a downward direction. It could have nothing to do with company earnings. It could have everything to do with tariffs and things that are happening around the world, but who knows what that catalyst is going to be. But people should be very cautious of that they're not overweighted.
So a catalyst question tied to this tech conversation. If we're going to talk tech, we obviously should talk NVIDIA, now bigger than several entire sectors. I guess question one is do you think that's sustainable? And two, is a move to the downside in NVIDIA potentially going to send a big enough ripple to be that catalyst for the correction in the marketplace?
It very well could. And who knows what's going to come out technology-wise in the next 2, 3, 5 years. It's going to be wild to watch it. And NVIDIA has been at the forefront. So as long as they can stay at the forefront and be that driver, then I think it's going to do very well. But if you've got a company that comes in that disrupts NVIDIA, then you could really see a big pullback with NVIDIA. So it's something we're going to have to watch very closely as we move forward. People just don't want to be overweighted in NVIDIA or any one particular company.
And Patrick, outside of tech, are there any other spaces or sectors that you are keeping an eye on, either for positive or negative reasons?
I love value companies. Warren Buffett typically never makes wrong moves over time. So I pay a lot of attention to what folks like Warren Buffett are doing, and he's sitting on a lot of cash right now. So there's never been a better time. People talk about this when the markets are down, that it's only a paper loss, but nobody ever says that it's only a paper gain. So there's never been a better time in history at all-time market highs for us to take some of the chips off the table and start taking some of those profits, right? Because it's not a gain until you realize it either, and start diversifying. So I like, Burke B. I like companies like that. I also like utilities. Utilities is a nice, stable place to be. And especially with all the AI and the energy that is needed for all these data centers that are popping up. We're in Atlanta, which is like the Silicon Valley of the South. And we have a ton of these data centers just popping up everywhere. They're massive. And so the energy that's needed for this, so I like that. I like the utility sector for that as well.
So if you like the utility sectors, and utilities sort of been a quiet outperformer in terms of this sectors, in part because of this infrastructure build out, do you view that as a short-term defensive play, or is this a long-term hold for you in utilities?
I think it's both. I like utilities. It tends to be very stable over time, but especially as I think we're going to be in for some volatility over the next 4 to 6 months in one form or another. I like it because it's going to be very stable. But then long term, with the energy demands from AI, I think it's a good long-term play as well to be taking a good look at utilities.
Well, Patrick, we appreciate you taking the time to talk with us this morning. I hope you have a wonderful weekend. That's Patrick Mueller, the RFC and president of Vela Advisors. Thanks again for being with us today. And we've got plenty